You have changed your strategy more times than you can honestly count. Maybe it was 4, maybe it was 11. You moved from ICT concepts to supply and demand to a moving average crossover to some order flow setup. You watched a 17-minute video on it, 2 in the morning, and every single time you told yourself the same sentence. This one will work. This is the one. And every single time, within 2 or 3 weeks, you were back in the search bar typing best Forex strategy 2025 like a man looking for a new pair of shoes to fix a broken ankle. Here is what I need you to understand before this video is over. Strategy is not your problem. It has not been your problem for a long time. And every week you spend hunting for a new one is a week you're not fixing the actual bottleneck, which is you, the operator, the person sitting in front of the screen with a finger on the mouse and a nervous system that was not built for this. The cost of not seeing that clearly is not just money, it is years, it is the slow erosion of your belief that you're capable of doing this at all. So let's actually look at what is happening, because the story you have been telling yourself is comfortable, and comfort is expensive in this game. The story goes like this: I'm not profitable because I have not found the right strategy yet. If I can just find the setup with the right win rate, the right risk to reward, the right confirmation criteria, then I will finally be consistent. This story is seductive because it puts the problem outside of you. It makes the solution something you can acquire, download, learn from a video, copy from a screenshot. It makes the fix a transaction, find the thing, get the thing, become profitable, simple, linear, hopeful. But think about what you actually do when you trade. You sit down in the morning, you have a plan, you know your levels, you know what you're looking for, and then a candle moves in a way that almost triggers your entry, but not quite, and you feel that little pull in your chest, and you enter anyway, or you skip it, or you enter, and the trade moves against you 2 pips, and you close it because the feeling is unbearable, and then it goes to your target without you, or you take a loss, a clean loss, a planned loss, and instead of stepping away, you open the chart again because something in you cannot tolerate ending the session down, and you take another trade and another, and by the end of the day, you're not down 1 planned unit of risk, you're down 4 or 5. And you close the laptop and you say, I just need better discipline, or I need a strategy that filters those out. You do not need a strategy that filters those out. You need to understand why you cannot follow the one you already have. This is what I call the operator problem, and once you see it, you cannot unsee it. The operator problem is the gap between what a strategy says to do on paper and what you actually do in the chair. It is the distance between the plan and the hand, and that distance is not random. It is not a character flaw. It is not because you're weak or stupid or undisciplined. It is because of how your nervous system is wired to handle uncertainty. And you have never been taught how to work with that wiring instead of against it. Here's the part most trading educators will not tell you. A strategy is a set of rules for processing market information. That is all it is. It is a filter, it says. When these conditions appear, do this. When they do not appear, do nothing. But you're not a filter, you're a living organism with a nervous system that evolved over 200,000 years to resolve ambiguity as fast as possible, to eliminate uncertainty, to get to safety. And trading is the one environment where uncertainty is not a bug. It is the entire structure you're asked to sit inside not knowing, to act on incomplete information, to risk something real on a probability. And your brain, your ancient survival-oriented brain, finds that almost physically intolerable. So what does it do? It overrides the strategy, not because you're weak, because the strategy asks you to wait. And waiting in uncertainty registers to your amygdala as a threat, because the strategy says take one trade, and your dopamine system wants the hit of the next one and the next one, because each new entry feels like a new chance to resolve the discomfort, because the strategy says accept this loss and walk away. And your identity, your sense of being a competent person, cannot easily absorb a loss without trying to undo it immediately. This is not a discipline problem. This is a nervous system problem wearing the mask of a discipline problem, and you cannot fix a nervous system problem by changing the strategy. You would not fix a shaking hand by buying a different pen. Now here's where it gets more specific, because the operator problem does not show up the same way in every trader, and if you do not know which version you're running, you will keep misdiagnosing yourself. There are 3 primary manifestations, and you will recognize yourself in at least one of them probably two. The first is hesitation. You see the setup, it meets every criteria, and you have back tested it. You know the win rate, and you stare at it, and you do not click, or you click too late, or you reduce the size to something meaningless because you're trying to manage the fear of being wrong more than you're trying to execute the plan. And then the trade works, and that is almost worse than if it had lost, because now your brain has learned that hesitation saved you from discomfort, and it will make you hesitate again tomorrow. You're not struggling with a bad strategy, you're struggling with a nervous system that has learned to protect you from the feeling of being wrong. And it is doing that protection at the expense of your edge. The second is overtrading. You take the planned trade, it works or it does not. Either way, you're still in the chair and the chart is still moving and there's another setup forming. Maybe it is not quite your setup. Maybe it is close. And you take it and then another, and the session that was supposed to have 1 or 2 trades becomes 5, 6, 8. And you're not doing this because the strategy told you to. You're doing this because sitting in the uncertainty of a finished session with nothing to do, with the market still moving and you just watching, feels intolerable. Trading gives you something to do. It gives you the illusion of agency in an environment where you actually have very little. And your brain craves that agency like a drug. This is not a strategy problem. No strategy can save you if you will not stop trading when the strategy says stop. The third is revenge. You take a loss, a real loss, a valid loss that was part of the plan. And logically, you know that, but something in you cannot let it be the final word. You need to get it back, not tomorrow, now, in the next 5 minutes, in the next candle, and you re-enter often in the same direction, often bigger, because the size has to match the emotional urgency of the wound, and you lose again. And now the wound is bigger, and the cycle has momentum. You did not lose because your strategy failed. You lost because your identity could not tolerate being in the red, and it hijacked your hands. But before I show you how to actually work with these 3 patterns, you need to understand one more thing, because if you skip this, the fix will not hold. You need to understand why strategy hopping feels so good and why that feeling is part of the trap. When you find a new strategy, when you watch that video, when you read that thread, when you back test it and see the green streaks, your brain releases a specific neurochemical response. Dopamine, not because you have made money, you have not traded it yet, but because you have resolved uncertainty. You have found an answer. The discomfort of not knowing what to do is temporarily gone. And that resolution feels like progress. It feels like you're getting closer. And for a few days, you trade it with fresh eyes, with hope, with the belief that this time the structure will hold. And then the first loss comes, or the third, or the flat week. And the doubt creeps back and the strategy starts to feel fragile. And your eyes drift back to the search bar. This is a dopamine loop, the same loop that makes you check your phone, scroll through feeds, look for the next notification. The strategy is not the product. The search is the product, the finding is the hit. And you're not a bad trader because you fall into it. You're a human brain doing what human brains do when they are handed an environment with infinite options and no clear feedback loop. Trading is the perfect environment for this addiction because the feedback is delayed, noisy, and emotionally charged. You can go weeks without knowing if the problem is you or the system. And in that ambiguity, the brain reaches for the easiest resolution, a new system, a fresh start, the fantasy of a clean slate. So here's what you actually do. Not tomorrow, not next Monday, tonight, and then every trading day after, I call it the operator audit. It is 4 steps. It is not complicated, but it requires honesty, and honesty is the thing this game punishes you for avoiding. Step 1, before you open the charts, you write down 1 sentence. Not a trading plan, not your levels. 1 sentence about what you're likely to do wrong today, not what the market might do, what you might do. I'm likely to overtrade after a loss. I'm likely to hesitate on A+ setups. I'm likely to move my stop because I cannot stand being in drawdown. You name your specific operator failure before it happens. You pull it out of the background and put it in front of your face, because the version of you that is calm before the session starts is not the same version of you that will be in the trade. And you need to leave a note for that future version. Step 2, you set a hard trade limit, not a suggestion, a limit, 1 trade, 2 trades, whatever your strategy calls for, and you write it on a physical piece of paper and you put it next to your screen. And when you hit that number, you close the platform, not in 5 minutes. not after you check one more thing, you close it. Because the version of you at trade 3 is not making rational decisions. That version is running on cortisol and momentum and the desperate need to feel in control. And you do not trust that version with your capital. You made the decision earlier when you were calm and you honor it. Step 3, after every trade, before you take the next one or close the session, you write down 3 things. What the setup was, what I actually did, and what I felt in the moment I made the decision. Not what I think I should have felt. What I actually felt was I bored. Was I anxious? Was I trying to prove something? Was I trying to avoid the feeling of sitting still? You're building a data set, not about the market, about you. And over 2 weeks, 3 weeks, you will start to see the pattern. You will see that you always overtrade on Thursdays, or that you always hesitate after a losing Monday, or that you revenge trade specifically when the loss feels unfair, when you did everything right and the market just took it anyway. You cannot fix what you cannot see. And right now you're trading blind to your own behavior. Step 4, once a week, you do not look at your P&L, you look at your execution score. Did I follow the plan, yes or no? Not did I make money, did I do what I said I would do? Because you can follow the plan perfectly and lose. That is trading, and you can break every rule and win. That is also trading, and if you measure yourself by the outcome, you will never build the discipline to follow the process, because the process and the outcome are not the same thing on any given day. You measure the execution, you reward yourself for the execution. You let the money be a byproduct of 1,000 correct executions, not the goal of any single one. This is the work. It is not glamorous. It will not go viral. Nobody will make a 17-minute video about it with dramatic music and green arrows, but this is the actual gap between where you are in consistency, not a new entry model, not a different time frame, not a better indicator. Your hands, your nervous system, your willingness to sit in the discomfort of uncertainty without reaching for a new trade, a new strategy, a new distraction. And here's the thing that should reframe everything for you. The traders you admire, the ones who are actually consistent, they are not running a better strategy than you. Many of them are running simpler strategies than you, fewer indicators, fewer confirmations. Less complexity. What they have that you do not is a settled relationship with the strategy they chose. They stopped looking, they stopped optimizing, they decided, I will run this imperfect system and I will manage myself inside it. And that decision, more than any edge, is what allowed them to build consistency. Because consistency is not a product of a perfect system. It is a product of a stable operator running an adequate system for long enough to let the probabilities play out. You do not need another strategy. You need to grieve the idea that there is one out there that will make this easy, that will remove the discomfort, that will let you trade without ever feeling uncertain, without ever feeling the pull to overreach, without ever having to sit with a loss and not fix it. That strategy does not exist, and chasing it is the most expensive thing you're doing right now, not in dollars, in time and momentum, in the slow, quiet death of your confidence. So tomorrow morning, before you open the charts, you do the audit, you write your 1 sentence, you set your trade limit, you commit to logging what you feel. And at the end of the week, you score your execution, not your P&L, and you do that for 30 days. Not because it will make you rich in 30 days, because it will make you visible to yourself, and you cannot fix what you cannot see. And once you have done that, once you have started to see your own patterns clearly, you will notice something. You will notice that the urge to search for a new strategy gets quieter. Not because you have found the perfect one, because you have realized the search was never about the strategy. It was about avoiding the harder conversation. The one where you look at your own behavior and say, this is what I'm doing and I'm going to work on it. And that conversation does not end here, because once you can see your patterns, the next layer is understanding why those specific patterns live in you, where they came from, and how to actually rewire them at the level where they start. And that is where most people stop, right at the edge of the real work. Because seeing the pattern is easier than changing it, but changing it is possible, and it starts with something most traders have never been taught to look at. And that is what we go into next.